clients, welcome to PhillipCapital's Weekly Market Watch. I'm Yong, Analyst from Phillip Securities Research. Today, I'm going to share with you on Perion Networks. This company is listed on Nasdaq and recently completed an RTO to become the second largest search provider in the US, with over 400 million monthly searches and 3.4 billion search queries worldwide in first quarter 2014. It's currently trading at 8.1 times price over free cash flow and 5.3 times EV over EBITDA. With a market cap of nearly $700 million, we have a target price of $13.75 per share, translating to 34% potential upsides. 30% of search traffic is generated outside traditional search websites, for example Google.com. They could be type-in domains, where search terms are directly typed into the browser's navigation bars, searches on other websites that are redirected to or powered by search engines, or installed toolbars, etc. CC increased the number of end-user searches under Microsoft Bing agreement to 2.4 billion in first half 2013, up 70% year-over-year. Adjusted EBITDA increased 71% year-over-year as well. It focuses entirely on publishers who incorporate the search settings into the apps and are paid each time these apps are installed. Hence, they focus on product development and distribution without worrying about monetization aspects. End users' search traffic via the search settings are channeled to search engines. In turn, they pay CC as per search revenue agreements. It has a critical mass to negotiate favorable terms. The shareholders now own 81% of Perion after the RTO and have committed to lock up 90% of the shares for 2 years until January 2016 unless Perion share price achieves a predetermined levels of 15, $18.50 and $22 per share, substantially below today's share price of $10.24. Combined entity now also enjoys economies of scale as it will account for 2% of all US queries, etc., more than 400 million of monthly searches, ranking it ahead of search engine AOL. Management is experienced too. Joseph joined as CEO in 2010 and increased revenue by 240%, while the share price rose by 120% in 3 years. Lastly, JP Morgan invested in 2012, which should have valued this at $1 billion currently. Instead, the seller shares are currently worth less than $600 million at today's share price. Historical financials of 2011 to 2012 is not comparable, as the company signs exclusive search agreements with Microsoft Bing, which entitled them to windfall revenues and profits. 2013 is the year where pro forma search revenue normalizes, and forecasted to increase 13% year-over-year. Free cash flow is predicted to increase by a similar amount as well to $85 million. Interactive Corp, AVG Technologies, and Blue Coral are its peer group. Perion is trading way below the peer mean, and 22% below the lowest, Blue Coral, which we consider to be the closest in terms of size and the business model, although its 18% EBITDA margin is lower than Perion's 27%. All three companies have also executed share repurchase programs, which we expect Perion to repurchase shares once lockup agreement expires. At 7.5 times EV over EBITDA, which is 20% below peer mean and 10% above Blue Coral, Perion will have a target price of $13.75 per share, 34% above today. With that, I have come to the end of this presentation. Do refer to the report issued last week for more information. Please subscribe to us on PhillipCapital YouTube channel and Facebook and stay tuned for more Market Watch videos. Thank you.